Both. So based on your question is that what is the use of the opening gap and then the closing gap? Now is very, very, very key important point. And the question is a very powerful question because see, these are marked up with you the other time, which I don't know whether it's going to distract us, but even though price is far away from there. So now, what is the use of opening and closing gap? The first thing you have to put at the back of your mind here is that what we're looking at is where do we stop last night and where do we continue? Now, there is something that is called running 100 or is it 1,000 marathon. And you see they use stick that when you run from one point, you reach another point. Give the other person either continue or the person cough or the person will do U-turn. You have observed it. So in life, it simply means every blessed day as you live, you have to stop somewhere because of what? Night has come and you have to sleep. And then you have to start from another place when you wake up the next day. Now, this market is being segmented into sections, which we have talked about the London, the Asia, and the New York market, which are the three powerful markets that come together to make the moving of the candlestick you see represented here in terms of the price of buy and sell in the market. So the opening close, the opening tell us that this is where, for example, on Friday, on GBP US, this is where we stop. This particular candle, the close, because it's a bearish candle. We discover that it opened up here and then it closed here. So now you see one serious thing. Thank God you asked this question today, because today you're going to see another dimension of the market, which is completely strange. Do you see where this market closed last week? And do you see where it opened this particular week? This market come and open here with a difference in price of about how many pips? Let me see. About how many pips now? About 64 pips. That's the gap that the market gap from Friday where we close, where we open today. So we will use that one to know that, okay, if we have closed here on Friday, they're waiting for the open day. Now, there was people that they were on a sale on last week, and they believe that the market will continue going down. And some have made a lot of money, but they could not take it out with the hope that this market will continue because they see 1, 2, 3 weeks that's been coming down. Do you see what this will do? It left this particular price to come and open at this particular price, meaning that whoever has been on sale from Friday, they are completely now out of the market. And I told you earlier that the market aim is to take people out of the market and collect their money and send them back to the village. That is the aim of the market. The market doesn't give a fuck about anybody. You lied, you are crying, and that is what they are doing. So they manipulate the market in the close and opening with much some of the time with gap, like you see what happened today. So I think this your question come at the very right time. I believe you understand. So what we are doing, the use of it is that where do we stop yesterday? And where are we today? And where are we going? Where we are going is where we begin to look for the closest liquidity. So as we close here on Friday and we open here today, the basic thing we understand here is that there was a fair value gap here. So even when we could have marked it earlier before this happened, we discovered that this market jumped up and come and open at this fair value gap. But is it normal? This have never happened this year that we see a huge gap like this before. So you discover that it's a serious gap. So why the market, I have told you that if we are coming down, the green candles will be supporting the candles that they are coming up down. And that's exactly what we do here. You see that these two green candles supported this green candle, and it will not be able to what? will not be able to go back up here. Then it begin to come down. You see, right now it's supposed to show red candle, but it's still showing green. Why? The gap was too huge, and it have not yet even balanced last week price opening price. So definitely, if you go back to lower time frame, you will see what it's doing on the 15-minute time frame. So we are to come to 15-minute time frame. You see, it's now showing red candle. Why was it not? Because of there is still a huge gap that the market is supposed to balance before any other thing. So you see, this is where we close. This is where we open. So this is the first time you are seeing this huge gap. Even me in the recent days, and I believe it's because of the coming of Trump. Because by the special grace of God, the market will definitely be good, especially with the coming of Trump as the president of the United States of America. Why we use America? Because every country, as I keep on saying, most of the countries on earth are using United States of America dollar as the reserve. So that simply means their economy, including Nigeria, is being determined by the strength of their own currency against dollar. And the strength of any currency is being determined not by the country, whatever, is the economy. How many things are they importing? How many people are coming to buy stuff from them in their country? Those are a lot of things that determine the growth of an economy. That is in the physical before we talk about the trading aspect of the economy. So those are some of the stuff you have to put at the back of your mind. The opening and the close, the stand from where we stop and where are we going to continue to go from where we stop. So where are we going to go? That is where the issue of liquidity comes to mind. Issue of fair value gap that have to be balanced or rebalanced come to mind. So all of these things, they come together and then they give us the clue of, okay, this is what the market may probably do. This is what the market will not probably do. So as you see it here, that's exactly what happened. So if you could have come here by 11 p.m. Nigeria time, you see these types of huge gap. And then you see you have another serious daily fair value gap here. Then you could have waited for the reaction here and see what the market has to do. Why? Because you have on the 15-minute, you have your liquidity here. You have buy side liquidity here. And what do you see? The market come and smash it. And then what do you see again? The market begin to retrace down to the opening price. So you see what it has been doing here. You come back and then keep on bouncing. To be on the safer side, sometimes maybe you may have not been able to see any reasonable trade during the ancient market because of what it has been doing here. Why you could have, if you could have buy here still, you will still not be in that comfortable seat. Why? See where the market have a very the market is already in the zone of a daily fair value gap, almost to the midpoint of the fair value gap. So you may could have stand and still stand still because there's no any other thing that indicate this market will go higher because of this fair value gap. Well, if you more have traded, you could have wait. Okay, let's break through this fair value gap and let's see what the market does. But immediately, this is the opening price. You notice, and price have refused to go below it immediately after it opened and around 1 a.m. See what it has been doing, and then you discover you have a break here. What you could have been doing is to just look for your fair value gap anywhere the break happened, and then you just look for an entry. And then do we have any fair value gap here? Yes, of course we have fair value gap here. Remember, I told you that you can be able to use wick too, because wick are a very, 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 very important key message that they are passing. So left to me, if it is me, I could have entered this market based on this particular place. Why? This is the most important thing. This week now, you just measure it after it has already been able to give you that particular week, and then you have this break. So anything you understand that the market wants to trace back to the week into an opening price. Remember why we're doing this? Because it's into an opening price. And then we have had series of rejection of price. This is the opening price of today. The market wanted to go up, but it later now come back. This is the open. open price is around open price is 903, right? 903. Open price 788. So we have to take it to 7, right? Is it so? Yeah, opening price is 25903. Okay, 903. That's the opening price. You see, the open here, it went down here is because this particular one, the candle is like this, the gap, as I told you, was shockingly too much. And I think in recent time, they have not been able to have these types of serious gap. So you discover that this is what the market has been doing. Even though based on fair value gap, you may have not been able to enter this market anywhere close by here now. Why? Simply because number one, see the first fair value gap we have was here, which we are going to take it like this, and there was no entry here. One, and continues up to now, we could have not been able to have any entry based on fair value gap. Why? So it's not a must that you must enter the market every blessed day. Yes, that's it. If you must be able to follow the rules, it's not a must that you must trade every blessed day. And you see the condition of the market. So it look like this market will not be able to go the way I want it. You could have allowed, this plenty move. Yes, that plenty move. Because it is not every day that you must be able to trade. But if I was to trade it, I definitely could have been able to find entry in here. That's based on 5 minutes. What of 15 minutes? We have any fair value gap of 15 minutes? The answer is still no. So the market, after it have done what it have done, it aggressively begin to move down to attack this particular people here. And then you see after it attack them, the gap is still huge. So if you may have entered this market based on some particular ingredients here with the hope we may break it, you may have definitely have a fair value gap around somewhere here to be able to get your entry to that downside. But this particular fair value gap here, you may definitely not be able to see it because of you may still be contemplating on this particular, because this is where the market opens. This is where the market opens. But if you would be aggressive, we say you take it on 5 minutes or 15 minutes down to even 1 minute. So you see this is 15 minutes, this is 5 minutes. You can use 3 minutes. And then for those who have a P version, that's the people that they can be able to use 2 minutes and a lot of other things like that. So why we don't want to go below 5 minutes is because sometimes it's not advisable because those types of low entry on currency pair, they may not be able to move the way expected to. But if you see based on 3 minutes, you have a fair value gap here that run this particular market down. So when you have a break in a particular place that the market has been previously resisting it, for example, this particular place, you discover that even on 5-15 minutes, the market will not be able to penetrate it. So from here, you could have definitely be able to understand that, okay, we have a drastic break through this particular resistance, shift in market structure, and it is aggressive that it will. And what is the time, which is very, very important. You discover that we start this section by which time? We start this section by 6. So anytime you want to understand the section, just come here and pick this and then look for 6 a.m., which is 12 midnight New York time. So this is your opening price for the starting of the London market. So before London market, this is another thing I want you to pay key attention to. Before London market, which market have happened? Asian market has happened. So this is another new way you can be able to understand and pick trade comfortably and have your TP, your take profit hit. So now you discover that today, when you wake up in the morning, this is what you have to understand. That's what we call trading range. Trading range. Trade range. Trading range. What is your trading range? Now, trading range. Now, in terms of trading range, what it means here is that what happened from the other section. So when you put this also on the immediate open hour of your of your ancient market. You know that from here to the opening is ancient market. So when you put your cursor on ancient market, that is where Fibonacci. Then you pick your Fibonacci, and then you measure the high and the low of the Asian market. So from here now, we measure the high and the low of the Asian market. Now pay very serious attention, because I think this is what you're going to do to be getting entry. Pay key attention. Now, this is the open. This is the high, not open. This is the high and low. This is the low and the high of Asian section. Meaning that you came in at this blue line, 6 a.m. Nigeria. You were watching to see what is going to happen. And you have what here? You have buy-side liquidity here, sitting here on this very particular place. So you could have named it buy-side liquidity, which is going to be your what? Your primary buy-side liquidity. So we have primary buy-side liquidity. So you put it on the top left-hand side, and then you change the color to anything black to differentiate them with the opening color. Okay, or this one could be green because it's buy side. Then change this one to green, and that is it for this particular one. So we can copy this in order to get to help us get the sell side. So you discover that this is our what? Primary buy side liquidity. So when you measure it like this at 6 a.m., you're still watching. You have not done anything yet. And then remember, you have a particular place here called what? Call your opening price. So this is the opening price. Opening price. Anytime you have a large gap like this, you have to mark this particular place. Call it consequent encouragement. You have to mark the midpoint of the gap. And then this is how we mark it. You mark the midpoint of the gap. And to differentiate it to, you can make it black. And then come here, style, change it to dash. Okay, it was the write-up. Black. So you can write on it too. New week. This is new week. Remember, new week, opening gap, consequence encouragement. So just put it there like that. You can make it right, middle, so that as the market keep on going today, you'll be seeing what is doing. Then you take this one off. All those things, there are things. You see, we are doing all these things in less than. So now, this is what you have done. You may have done for this one. Then this particular one to just copy it, clone it, and then you bring it here. Remember, we're talking of buy and sell side primary, and this is rate, and then this is down, bottom, yes, and then style. This is sell side, not buy. Primary sell side. So you see, all of these stuff you have to definitely be able to take note of them. This is rate. Good and fine. So now you then now take this one off. But before you take it off, you have to mark this one too at the same time. Or you just have the price. This particular place, this one, you can leave it like this, or we'll make it black. Make it black. And then we can make it more bold. Now, understand what I'm doing here. This particular, let me remove the Fibonacci. Which one am I taking? Let me not delete the. See. Good. We use Fibonacci to do what? To measure the high and the low of the market. So when I come this morning, this is what I was left with. This is it. This was it. So you are not seeing anything that has happened already, but you know you have a sell side, primary sell side liquidity here, and then you have primary buy side liquidity here. So when the market opened by 6 a.m., you are watching, and then you may have taken it to 5 minutes to see what is happening. 5 minutes there now. So on 5 minutes now, this is what you have. So you are watching and seeing what is happening. We open here and then we come down here. And then definitely, maybe you could have buy here, not maybe. I know if it is me too, I may have buy here, somewhere here. Why? When we come to this place, we discover that the market rejected it at the buy, at the opening price. And then there's a fair value gap here. So even when you buy here, you are not wrong at all. Why? Where you will be wrong is one thing now. You see this black line. This black line means equilibrium. That is between the buy high side and the low sell side liquidity. This is the midpoint. And then there is what we call discount and premium. Now, anything below 50%, remember this black line is called discount. This is discount. This is premium. Premium, right? Good. So what is the use of discount and premium? On any market, high and low of that section, you are not to buy at premium and you are not to sell at discount. So when this market was at this my line, why? Because I have measured the open, the low, and the high of ancient market. That's what they did all. So I know that the market may go up or will go low. Highest of the order, it will consolidate. But because I'm not a fan of consolidation, I notice that we are in a premium market when I do this, and the market open where? Open at premium. So what will be my bias? I could have been standing still to see that this market, either it break through this particular place and then give me fair value gap to begin to look for sell side, or because it is opening, I will definitely be able to begin to look for sell in this zone, in the premium, and look for buy in the DC cap. But remember, we said something. The market is looking for what? For liquidity. So the market is looking for liquidity. So I noticed that, okay, we are in between the open price. When we open, what do we do? The market first makes a high here. Let me take this off. This is the high the market makes. And then this is the low. Remember, now we're talking of the section high and low. So I'm watching what is happening here because we say give it at least 1 hour. So that's 11 to 12 midnight. No, sorry. From 6 a.m. to 7 a.m., which is our normal time here, I was watching to see the high and the low the market made. And then this is the high the market made somewhere around there. We'll take the blue line up and see, and somewhere here. This is the high of the section. And then this is the low the market makes so far. The market has made this high and the low so far. This low so far. So what am I looking for now? I'm looking to see which one is going to take first. And remember that we have a primary buy-side liquidity here. If we could have taken this buy-side liquidity, it could have been 1 mil better. But I noticed something that you understand that we're talking of where the market is sitting. You know that this is this particular blue, the blue or whatever color here now. This large color here now, the market is sitting on another daily fair value gap. So you should not be thinking of anything the market should do here, either reach here or pass here, more than the market should reverse back down this huge gap, at least, if it is 50%, which is this line here now. See what the market is doing there, right? This particular place here now. So you are all this thing here is that on daily you could have may have sell here, sir, and you are still safe because the market on daily time frame is telling you that this your particular fair value gap is point of either the market will go through it or the market is to reject it. But mostly the market is to reject it, which is to our own advantage because on daily time frame we notice that this fair value gap is the strongest one that market can be able to resist and go down. So you will not be thinking of the market may go up again. Why? You are sitting number one at a daily fair value gap for continuation of your downtrend. Because on daily, you notice that it's a downtrend. One. Secondly, you are having the market already based on Asian section on a premium. So even when you are to buy on premium, you should use minimum of leverage and be ensured to take partial and move stop as soon as possible. So based on this particular entry mechanism, if you are to enter here, this will be your exit number one. No argument, no question to ask. You could have entered here and how many pips you see? This is 10 pips. Is that what you want? And how many pips are you going to reach? 30 pips. Well, it's fine because some people trade 10 pips and they are cool for the day. And if you could have had it here, it's still not up to 20 pips, 15 pips. And you know that you are where? You are in premium. So you should be careful trading on this particular level. So you discover that when the market is this high, it has made, and it was doing this thing, you are still watching still. And then what does it do? It then now make this low go up again and it break it. You could have had an entry there. If you understand this premium and discount earlier before today, this could have been your entry number one on this fair value gap. So on this fair value gap here, you see this is the fair value gap I'm talking about, referring to, so that you see it very well. This is the fair value gap I'm talking about. I will change the color so that you see it very well. This is the fair value gap. Because of what? Why am I selling? I can sell here even when it hits stop loss, it go back up. I won't be able to have a problem. Why? Because I so much have confidence in the sell because we're in premium and we're sitting at daily fair value gap, and then the market has already taken the initial high of the section, and then it has been to drastically push below this low. So I will definitely be able to say, okay, let me see whether we're going to sell in, and this was around which time? This was 8 a.m. this morning, like just 1 hour plus now. So if I could have been able to put sell here, you discover that my first TP may be on this very particular line, which is close to what? My discount too at the same time, right? Yes, it's close to my discount. So I will definitely be able to have my first take profit at this black line, which we say is the low between this and this. And then my second TP would be here. Why here? Because this is the low of the day. All over the day, this is the low. So I wanted us to, because of this gap here, we can definitely be able to have percentage or we'll take this low. So you discover that you have numerous, and this is sell side liquidity. Yes, we have failed to take this one because of what? There is other this thing that refuse us. We tried to make it the first time, they rejected us. We have now tried the second time, they rejected it. And then we have a fair value gap here. So this could have been your entry number one. Why? You are selling at equilibrium, which is the perfect selling point. So at equilibrium, yes, you have first TP at 13. It's still better than 10. And then this could have been, because you're just a newcomer, you can definitely be able to like have it to 30 pips. And then we may have definitely be able to have here to 40 pips. So that is the way you begin to look for buy and sell. Now remember, immediately the end of this section, this premium and discount of Asian market will be expired. Now, this is London market. I can hold this trade as I want. Whatever high and low is going to make between now to 11:30 or 12 to 12 Nigeria time, that is going to be the high and the low. I'm going to look for discount and premium to buy or to sell going further into our New York section in the afternoon. So the high and the low of every section expire every section. When you are trading for the day, then you can be able to look for the high and the low of the day. But in this time, we are trading intraday. Intraday meaning we trade section by section when the market open and when the market close. So if it is the Asian you could have traded, if this gap was not hit, then you measure yesterday, last week New York section from the opening and the close of New York section, and that is what you will be doing. Remember, this time has changed. US now is -5. That is why we have now left our opening from 5 a.m. now to 6 a.m. Initially the time was 6 a.m. Now the opening of Nigeria market time is now 6 a.m. The market now closed not 10 again. The market don't close 9 again. The market closed right now at 10:59 p.m. every day, which the market now opened by 11 p.m. Nigeria time. So you study, I told you about the summer time and their normal time in the United States of America, which affected the market in general in terms of the opening price of the market and the closing time price and the closing time of the market. So you discover that your entry number one could have been here. You may have had it here. Why? This is the opening of the market. So while you were still contemplating here whether it will break it or not, you have definitely be able to, I think how much was 30 pips and what is the stop loss? Stop loss could be above here, and that is around 7. So 7 divided by 7 times, or 30 divided by 7. Some people, experts could have had it even at 5 pips around here. So that is it, and then they have 40 pips here, and that is how it works. This would not be the final of the trade. Some people may still hold it down to this particular opening close of last week, which is still fine. Will the market reach there? We're watching, and then we may have taken partial. That is exactly what we have been able to do so far, so good. So I hope you are able to understand today perfectly that you can be able to use your intra-section market to determine the direction of the market, one, and equally your premium and discount, very, very important, so that you will not be going and look for buy when the liquidity has already taken, or when the liquidity fails to take. Because you can see here, it was close to the liquidity, and then it rejected it. And it's still fine because they are on the same section. It was the same opening price of that same time that were same day that the high was not able to be taken. So that is it for this particular section. And I think my laptop is telling me battery low, battery low. So I believe if you find value here, if you have any question, just drop them on the Telegram, and then I will attend to you, or you can call me later, and then let's find out. I think we will definitely be able to have class tomorrow again. So see you, stay safe, and take care. And drop any question on the Telegram. I will attend to it, and then we'll look forward to hear from you. And I believe you are doing your demo trading very well, right? All right, that's fine. So we wish you the best and keep on, and then make use of this particular and report to me what you observed by next tomorrow. So if you class will go tomorrow, we'll let you know. Stay safe. Bye.